Today, we're talking about something that might surprise you: how credit cards, when used responsibly, can actually be one of the most powerful tools for building your financial future. Now, I know what you're thinking. You've probably heard horror stories about credit card debt, sky-high interest rates, and people getting into serious financial trouble. And yes, those stories are real. But here's the thing: a credit card is just a tool. And like any tool, it can either help you build something amazing or cause damage if misused. In the next 14 minutes, I'm going to show you exactly how responsible credit card use can open doors you might not even know exist. We're talking about buying your first home, landing your dream job, and building genuine financial security. So if you're ready to understand the hidden power of credit, let's dive in. Let's start with the foundation of everything: your credit score. This three-digit number, typically ranging from 300 to 1250, is basically your financial reputation score. And whether we like it or not, this number follows you around and influences major life decisions. Think of your credit score like a review left by lenders every time you borrow money. Just like you might check reviews before buying something online, lenders check your credit score before deciding whether to lend to you. And just like how businesses with better reviews get more customers, people with better credit scores get better loan terms and more opportunities. So how does a credit card help build this score? Well, your credit score is calculated based on 5 main factors. First, payment history, which makes up 35% of your score. This is the big one. Every time you pay your credit card bill on time, you're building positive history. Every month, your credit card company reports to the credit bureau saying, "Hey, this person paid what they owed on time." That's like getting an A on a test, over and over again. Second, credit utilization, which is 30% of your score. This is how much of your available credit you're actually using. If you have a card with a £3,000 limit and you only use £300, that's 10% utilization, and that's excellent. The general rule is to keep it under 30%. Third, length of credit history at 15%. This is why financial advisors often say to keep your oldest credit card open, even if you don't use it much. The longer you've had credit accounts in good standing, the better. Fourth, credit mix at 10%, which means having different types of credit, like credit cards, student loans, or car loans. And finally, new credit inquiries at 10%. Here's the reality: if you don't have a credit card or any credit accounts, you might have no credit score at all. And having no score is almost as bad as having a terrible score, because lenders can't assess your risk. You're invisible to the financial system. A credit card, used responsibly, is the easiest and most accessible way for most people to start building that credit history. You don't need to take out a loan or buy a car you can't afford. You just need to use a credit card for normal purchases and pay it off every month. Now let's talk about one of the biggest purchases most people will ever make: buying a home. Unless you're sitting on hundreds of thousands in cash, you're going to need a mortgage. And here's where that credit score we just talked about becomes absolutely critical. Let me give you a real-world example. Let's say you want to buy a £250,000 home with a 30-year mortgage. If you have excellent credit, say a score above 740, you might qualify for an interest rate of around 6%. But if you have poor credit, below 620, you might be looking at 8% or higher. Some people with bad credit can't even get approved at all. That difference of just 2% might not sound like much, but Let's work it out. With a 6% rate, your monthly payment would be around £1,350. With an 8% rate, it jumps to roughly £1,650. That's £300 more every single month. Over 30 years, that's an extra £108,000 you'd pay, just because you didn't build good credit. Think about that. More than £100,000 just evaporated because of a number on your credit file. But here's the good news. You can start building that excellent credit score right now with a single credit card. Get a basic card, even if it's a secured card or a student card with a low limit. Use it to buy things you'd buy anyway, like groceries or petrol. Pay it off in full every month. That's it. You're now building the foundation for saving potentially over £100,000 decades from now. And it's not just about the interest rate. Many people with no credit history or bad credit can't even get approved for a mortgage at all. They're stuck renting forever, watching their money go to a landlord instead of building equity in their own home. Meanwhile, someone with good credit can buy that same property, and every payment is building their net worth. Your credit score literally determines whether you're allowed to participate in one of the primary wealth-building strategies in modern society, home ownership. That's how important this is. Now here's something that surprises a lot of people. Your credit can actually impact your ability to get hired for certain jobs. More and more employers, particularly in finance, government, healthcare, and any position involving money management, are running credit checks as part of their background screening process. In the UK, while they can't see your actual credit score, they can request a credit report which shows your credit history, outstanding debts, and any defaults or county court judgments. Why do employers care about this? Well, from their perspective, they're trying to assess risk and responsibility. If they're hiring someone to manage money, handle sensitive financial data, or work in a position of trust, they want to know if that person demonstrates financial responsibility in their own life. Fair or not, an employer might look at someone with multiple defaults, maxed out credit cards, or accounts in collections, and think if they can't manage their own finances responsibly, can we trust them with company resources or sensitive information? This is especially true for positions in banking, accounting, or anywhere you'd have access to financial systems. Some government positions with security clearances absolutely require good financial standing because financial distress is considered a security risk. The reasoning is that someone drowning in debt might be more susceptible to bribery or theft. Now let me be clear, having a credit check as part of employment screening is different than a lender checking your credit. It's usually a soft check that doesn't impact your score, and they're looking more for red flags like bankruptcies or serious delinquencies rather than your exact score number. But here's the thing, the best way to pass this part of the background check is to have an established history of responsible credit use. And again, that starts with something as simple as a credit card that you use wisely and pay off consistently. Think of it this way. You might be the most qualified candidate for a job with the perfect degree and impressive experience. But if you're competing against someone equally qualified who has demonstrated financial responsibility and you haven't, you might lose out on that opportunity. Your credit history is becoming part of your professional reputation, whether we like it or not. It's another reason why building good credit now, through responsible credit card use, is an investment in your entire future, not just your finances. All right, so we've established that credit cards can be powerful tools for building your financial future. But, and this is a massive but, they only work if you use them responsibly. So let's talk about the rules. Rule number 1. Pay your full balance every month. Not the minimum payment. The full balance. This is non-negotiable. If you can't afford to pay off what you purchased, you can't afford to purchase. When you pay in full, you pay 0 interest. That's right, 0. You're basically getting a free short-term loan every month. Rule number 2, keep your utilization low. Remember that 30% rule? Actually, if you want an excellent score, aim for under 10%. This means if you have a £1,000 limit, try not to carry more than £100 as a balance at any time. You can achieve this by paying off your card multiple times per month if needed. Rule number 3, never miss a payment. Set up automatic payments if you need to. One missed payment can drop your score by 100 points or more, and it stays on your report for 6 years. 6 years. Don't let forgetfulness destroy years of good credit building. Rule number 4, start with one card and keep it simple. You don't need 10 credit cards. One good card, used responsibly, is enough to build excellent credit. More cards means more chances to make mistakes when you're starting out. Rule number 5, use it regularly but modestly. Don't just open a credit card and leave it in a drawer. Use it for 1 or 2 regular purchases each month, like a streaming subscription or petrol, and pay it off immediately. This shows consistent, responsible use. And here's a pro tip. Treat your credit card like a debit card. Only use it for money you already have. If you have £50 in your bank account, you can spend £50 on your credit card. The difference is that with a credit card, you're building credit history and often getting rewards or cashback. With a debit card, you're getting neither. Let's bring this all together. Credit cards aren't inherently good or bad. They're tools. And when wielded responsibly, they're tools that can open doors to your financial future that would otherwise remain locked. We've talked about how they build your credit score, that crucial number that follows you through life. We've seen how good credit can save you literally over £100,000 on a mortgage, the difference between home ownership and permanent renting. And we've explored how credit history can even impact your employment opportunities, especially in fields involving financial responsibility. The key takeaway is this: start building your credit now, even if you don't need it today. Because when you do need it, when you're ready to buy that home, when you're applying for that dream job, when you want to start a business or make a major life move, it'll be too late to build a credit history quickly. The good news? Building excellent credit is actually simple. Get one credit card. Use it for normal purchases. Pay it off in full every month. Don't spend money you don't have. That's it. Do this consistently, and in a few years, you'll have an excellent credit score and all the opportunities that come with it. Your future self, standing in the home you own, working the job you earned, and enjoying financial security, will thank you for taking this seriously today. If you found this helpful, please hit that like button and subscribe for more practical financial content. Drop a comment below if you have questions about building credit, or share your own credit-building success story. And remember, the best time to start building your financial future was yesterday. The second best time is right now. Thanks for watching, and I'll see you in the next video.